All right. Good morning, everyone. Welcome back to the Tim and Tim Show, making moves in multifamily real estate Facebook group. We're also live casting to YouTube and LinkedIn. My co-host Tim Vest is not with us today. He is doing some site visits and traveling to check on properties that we own. Absolutely, it's a critical part of the asset management role that we play as owner operators, and um, it's just vitally important that we make sure we stay on top of our assets, right? I mean, checking on your stuff and making sure that it's being taken care of is crucial. So this week we have a guest with us. His name's Nick Van Dyke, and he's hailing from the great cold state of the North, Canada. He's a good buddy of mine, and I asked him to come onto the show because he's got an interesting story about how he started in the multifamily space or multifamily industry, ultimately was pushed into self storage, and now does uh, 30 plus $1 million developments all throughout the Southeast United States. I know of, I think there's a Texas deal that I've seen. There's a Florida deal a couple Florida deals that I've seen. So, I mean, this guy is incredibly active and is a wealth of knowledge. So without further ado, Nick, welcome to the show. Thanks for joining us today.
Awesome, Tim. Thanks for that nice, kind introduction. I think I don't know if I could do it any better myself, but yeah. Thanks for having me.
So Nick, all right, tell us your story, man. Like, kind of give us a little background. How'd you start in multifamily? Did you, where were you? Did you have a job before you did this? Like, bring us up to speed on Nick Van Dyke.
All right, so I'll backtrack. What feels like many years ago, like most entrepreneurs, read a book, Rich Dad Poor Dad, and that kind of kickstarted me into thinking a little differently. Um, Went to school for civil engineering, had a nice cushy job working for the government. Yes, I'm Canadian, so we live in Ontario, but so I had this nice cushy job working for the government, doing project management and all that stuff. But at the same time, I always had that itch to, like, I don't really want to work for the rest of my life. I don't want to have a job and work until I'm 65 and then enjoy my life. So we got into real estate, bought one rental property, then bought another, and then another, and just kind of that snowball effect of buying small multifamilies. At the very beginning, my wife and family and stuff like that were kind of on the fence against investing in real estate because you hear all the horror stories of it's terrible, you could have bad tenants and blah blah blah. But we bought one and it started making me money, and then I just kind of rinsed and repeat and did the same thing over and over again. I think now we're up to I don't know, maybe 50 residential units, which in Canada, things are done obviously a little differently than the way the US market is. Um, Fast forward, we built up that residential portfolio, and then afterwards, we got introduced to this US market, and being a Canadian and having so many, I guess, hurdles that you have to jump through for financing and dealing with tenants and all that stuff. Then we started looking into different asset classes. So we went and started buying a couple properties in the US, picked up a couple short-term rental properties in Florida. Then I was looking for this big next thing because I was, I at the time when I first started, we did a bunch of smaller multifamilies. We've done flips, we've done assignments, we've done what I feel like, everything. And then that natural progression is you just kind of keep getting bigger and bigger deals. So at the time we were looking for this, the next big thing. And then I was talking to someone else who was in self-storage, and their story is they flipped, I think it was like about 1,000 houses, and they never wanted to flip a single house again. So they jumped into self-storage with basically, just jumped into it. And I kind of went down that same road and started looking into it. And when you really compare self-storage compared to multifamily, obviously they have similar aspects because, it's an assets generating income, commercial real estate, all that stuff. But to me, self-storage really interested me from a larger scale, especially when comparing to investing in Canada, specifically Ontario, because the rules here in Ontario are awful. So that's kind of, I guess, the very short version of my story, and why we're jumping into self storage. So
Yeah, awesome, man. I mean, it's a fairly similar story to most people, right? Had a cushy job or had a job. Doesn't have to be cushy or not, right? Had a job, didn't really want to work for the man. I read the Purple Book, which is
Yeah.
Rich Dad Poor Dad. Had a bunch of light bulb moments. I mean, very, very almost identical story to myself. I mean, identical story to a lot of people, right? So, Nick, you are no different than everybody else. Congratulations.
Sure. Exactly.
So, it's interesting though, because, the rules and the laws and the regulations in Canada, I know are different. I've got a couple friends who are Canadian that have, become investors. It's interesting. Sorry, I'm just trying to think.
Yep.
It's interesting the way that they have your rules and regulations and your debt, and the way that just the loan structures are completely different. I mean, there's a lot of differences in the Canadian investment world versus the U.S. And some people would say that if you live in Canada, you can't invest into the US because you're foreign, right? Technically, you're a foreign investor. So, how does that work? Like, how did you crack the code on getting your Canadian dollars into US dollars and then investing it into United States? And what are some of the give me the top down view of like what that looks like?
So when I first started, I had this idea of like I want to start investing in the US, but that kind of just happened. Like there was no like, delayed, thinking about it, coming up with a nice, pretty organized plan and then doing it. It just kind of just happened. So we um we went to Florida and ended up during COVID when the world was ending. Everything was wonderful and you could live normally in Florida, but back home in Canada, you weren't allowed to live essentially. So we we're enjoying life in Florida, and I got this idea of like, oh, it'd be kind of nice to buy a house in Florida. So no intentions of buying houses or anything in the United States at the time. But a couple months later, we ended up buying two houses in Florida, and I literally just did it. We found a house, I ran the numbers, it made sense, and we put an offer in. And literally the entire time, I was like figuring out exactly what I have to do while doing it. And I think that is really not, maybe not a secret sauce, but like something for anyone listening. Like if you want to do something, there's really no better way to learn it than to just do it and literally figure it out as you go, right? Obviously, there's going to be hurdles and things that you got to learn, but if you're not doing it, not moving forward, you can just you can watch YouTube videos till the cows come home, but if you don't really do it, you're never really going to learn exactly what you're doing. So, but yeah, buying property in the United States as a Canadian is definitely different. Like even just the simple terms of like for example, this might even be something for you, Tim. Like when Canadians or buy a house in just any real estate transaction, the seller has a lawyer and the buyer has a lawyer. So you buy a house, the seller's lawyer represents them, the buyer's lawyer represents them. They kind of facilitate the transaction and they exchange and you close on it and change title and all that other stuff. Where in the US, you have title companies do that, right? So things in Canada, we don't have escrow and stuff like so. Just like the wording and the terminology is completely different. Yet at the same time, you're still doing the same thing. You're buying a house or you're buying real estate, right? So the big thing for Canadians investing into the US is doing it under the proper entity for the most time. Like obviously, depending on the level of deal and whatever you're doing, like if it's a smaller single family house or a small multi, usually you want to do things under a limited partnership because the US, you got IRS, the Canada, you have CRA. CRAs, they don't recognize LLCs. I know most Americans, when they buy property, you typically do it under either like an LLC or something along those lines, right? So if you, as a Canadian, if you bought a property in the United States under an LLC and you paid tax to the IRS, that's not recognized to the CRA. So now you end up paying tax to the IRS and tax to the CRA, which nobody wants to pay double tax. So
Oh,
as a Canadian, you want to do things usually, again, don't hold me to this, but usually you want to do things under limited partnerships because like an LP, our CRA recognizes it, so you get tax credits and stuff. But at the time of when I bought our first house, I didn't really know what I was doing. I literally was figuring it out as I went. So Yeah.
So how does that work for you as a developer if you're the general partner or the GP on these deals and not just a limited partner? Because whether you invest in your deals or not, but how does that look on the GP side of things?
Yeah. So for our developments, I guess we structure it as a syndication.
Yep.
So raise money from a bunch of LP investors, and then we're obviously on the
And
GP
can
side.
those LP investors be US based and or Canada based?
Yes.
And
So
how does that work with like the transactional currency? Do you like have the operating agreement in two currencies or do they have to convert it?
no. So what we did, we basically created. Uh, I guess step one is like, where are you raising all your money from? If you're a Canadian and you're buying an apartment building or developing something or doing a syndication in the US and all your money is coming from Canada, then you can have subscription documents and like your operating manual and all that stuff on the Canadian side,
Mhm.
right? So now, so what we did is we opened up a Canadian LP, the Canadian Limited Partnership. That limited partnership became an LP of the US limited partnership, which owned the land.
Gotcha. Okay, so
So,
it's deeded to the US entity, but the Canadian LP owns 100% of the SPE, right? Special purpose
yeah.
entity in the
So,
US.
so then any Canadian investors who invest into ultimately that US LP, their flow through is they're investing it into a Canadian company. So
Right.
we just set the currency to US dollars. So if
Gotcha.
we're selling a share, so we break it down into shares. So basically, it's like if you're buying something in our Florida development project and you're going to invest $200,000, you're investing 200,000 US dollars.
Right. So they have to convert it from Canadian to US and then the US invest as a US dollar investor.
Yep. And then
Gotcha.
and then basically, they're responsible for obviously that conversion. We pay our returns, our pref payments, all that stuff in US dollars because you can, like, as a Canadian, you can just open up a Canadian bank account in US funds. So all that money just goes
Hmm.
into that
Oh, yeah,
account.
yeah. Okay. Canadian base, right? So it's physically located in Canada, but it's a US dollar bank account.
Yeah, like when I log into my banking, I got all my Canadian accounts, and then I'll have a bunch of US, like they're Canadian
USD
accounts,
accounts.
but they're
Yeah.
in US dollar currency.
So how does that work for you as a general partner then? Because if the CRA doesn't recognize your partnerships or your LLCs, but it does recognize the limited partnership.
Yeah,
So is it truly that it just doesn't recognize the entity type of a limited liability company, but
yeah,
it does recognize a partnership?
correct. Yep,
Interesting.
yep.
So you get all the benefits of
How to structure it properly, right? Like the difference
yeah.
is like, yeah, like, and I think from my understanding, LLCs are more common if you're a US citizen.
Yeah, if you are a single person buying a house, like in your example of buying a house in Florida as an investment property, you might purchase it under an LLC, and that's for asset protection.
Yep.
But in the terms of the IRS, it's called a disregarded entity. It has for tax purposes, it has no meaning, no value because all of the income and expenses just show up on your tax return, which I think is your Schedule E. Don't quote me on that, but I'm pretty sure it's Schedule E. And and then it's saying, okay, well, if you did the same thing as a Canadian resident, well, the CRA is not going to recognize your LLC. So really, those are one and the same. US and CRA are the same. They don't recognize LLCs.
Yeah, like at the end of the day, I think it's just at the end of the day, the CRA, because like for example, if you did things personally and you personally pay tax to the IRS, then the
Hmm.
CRA would recognize that because you're a Canadian resident. You're like, I pay
Right.
X amount of dollars to the government.
It gives you credit for it.
Right. So it's just now if you did it under an LLCs, like the CRA, they don't know what LLCs are.
So
So
if you're a Canadian investor, then you want to buy a piece of property in the US in your personal name. So that
yep,
way you don't get double taxation.
yep.
And if you're an investor in Canada, you want to invest into a partnership, right? A syndication
Well, I think
partnership.
if you're still doing things like at the end of the day, if you're going to buy a house in Florida just for or anywhere in the US just for fun, you can do it under your personal name.
Yeah.
It's just I would recommend and like talk to your accountant, your CPAs, and all that stuff. But at the end of the day, I would, for my stuff that I've learned, is you want to do things under a limited partnership regardless. Just because,
Hmm.
There's
Well, how do you but say for example, it's Nick buying his own short-term rental down in Florida.
yep.
How is it a limited partnership if you're the only member?
Well, you can just so we created a disregarded entity as an LLC,
Uh-huh.
but that LLC is the general partner that only
Oh, the
owns
manager. Ah.
0.001 or whatever.
Yeah. There's the
You're
trick of the
either
trade.
personally on like the LP side, right?
Yep.
So that's how we did it. Like we had some investors, so like I was just another investor essentially in
Yeah.
the whole
Right.
deal. Um, but regardless, even if you're just doing it on your own, and I would still do things under an LP because there's a foreign international, or sorry, FERPTA. I don't know if you've ever heard of FERPTA before, which is
No, never.
basically withholding tax. Like if you're a
Yeah.
Canadian and you bought a house for what, it doesn't really matter. If you bought a house or multifamily property, whatever, and you sold it, the government would hold up to, I think it's like the government, the IRS would hold up to, I think it's 10 or 15% of the sale price until that you've proved that you've paid your taxes.
Hmm.
But if you do things under a limited partnership, there's essentially a loophole, and there's a way to basically be exempt from it. So that's kind of what I've learned so far in my
Interesting.
yeah.
That's interesting. Oh man. Well, it doesn't sound that hard now that you talk like high level, I get it. Now, but then let's talk about that real quick. As an investor, right, or somebody that's doing deals like this, I would tell you that that's the high level knowledge that you need to have. Now, the specific intricacies of it, that sounds like an attorney's problem. But as
Oh,
long
for
as you, as Nick, the owner,
sure.
operator, sponsor, understand high level how it should work, then you're good, right? And I think a lot of people get stuck on having to know every single little detail about everything. I'm like, no, it's not. No, that's the attorney's problem. You just
Sure.
have to understand which way you're driving the ship and let
That's
everybody else row the boat.
yeah, that's the who not how, and you need to have
That's the who, not how. Yeah.
the who's to do your hows kind of thing. So yeah, no, again, I don't know 100% of everything, but
No,
you
of
just
course, and you shouldn't. You should understand it from a 10,000-foot view of how it should work, and you can explain it to an investor in that level of detail so that they can understand it. And then the intricacies of the operating agreements and the legal structuring and the tax handling, that's all CPA and attorney problems.
you got it.
Yeah, that's interesting. Well, because I know when we first met, man, it was what, about a year and a half, 2 years? When were you going to do that first event up in Ontario? Like
Yeah,
2 years ago now?
year and a half, two, yeah, I don't know, something like that. Year and a
Pretty
half. 2 years.
close, right? Because I remember that was like the hot topic that we were kind of talking about back and forth and texting on all the time was that. And, because I had known a couple other Canadian guys that were doing this, but we never really got into the level of detail or the scale that you've gotten into. So, that's a good transition segue, right? So you started out with some single families and some small multis, and then you bought a short-term rental in Florida. Then you just went all in and you bought a self-storage facility. Did you buy that by yourself, or was that syndicated deal?
That's a syndicated deal.
So you bought your first self-storage. Did you like partner up with people that were doing it already
Yeah, in a roundabout way.
in a
So
roundabout way?
we basically, I guess the short story on that, we found an opportunity where there was basically a chunk of land zoned for self storage. We already had a bunch of the due diligence work that was already done, feasibility studies, all that kind of stuff. So we kind of knew, okay, if we bought this land, this is what we could develop. And I was tossing between, do I go crazy and go and develop something that's going to cost, 10, $15 million, but, it's going to have a stabilized value of 20 and $30 million once it's done? Or do I start small, get my feet wet, just do something, a smaller, 20,000 square foot facility versus going all in and doing 100,000 square foot? But I think it went back to kind of like, what do you really want in life? And like, breaking down and kind of reverse engineering that kind of stuff. And the idea of owning something smaller wasn't really going to move the needle for us per se. Plus, now I got to find staff and have that set up in a different manner versus the large 100,000 square foot Class A facilities that are brand new and modern and fancy. you can bring in like a third party management company like CubeSmart or Extra Space or whoever, and they essentially they want to develop or they want to manage those kind of properties. So they also potentially want to buy those properties and own those assets. So we can talk to them ahead of time before we even put a shovel in the ground to say, hey, this is what we're thinking. We have our feasibility study, we have all of our due diligence, but would you run it? And if so, would you manage it? And what would the performa look like from your end? You're the expert, you're the managers, and you do this for a living. What does the numbers on your end look like? And then we compare that to our feasibility study. And then we take it to another level and say like, okay, well, in the future, if we had this property at CO or it's stabilized, would you buy it? And then what would you buy it for? Like, what's the future value for it, right? So we kind of have all of that information, high level, and you take everything with a grain of salt before we even bought it. So it took a lot of the risk out of it, I would say. Like, obviously, construction and development, there's risk in everything, but it took a big chunk of the risk out. So
yeah, your exit plan has been mostly penciled.
Correct. So our plan is either you stabilize it, refinance, keep it, or you sell it at CO, or you sell it at stabilization. Once it's stabilized, you kind of have a few options. So long story short, we bought the land, raised $3.1 million to do that in a very, very short period of time. And now we're 60-70% complete construction. It should be open hopefully this summer, maybe late summer this year. And then just got to fill it up with tenants and refinance it or sell it or do something. But as of right now, things have gone very smoothly so far. And the demand is there, so most likely it'll fill up nicely, and then we'll hold on to it. So
Yeah, awesome. Well, hey, we got a couple of quick questions. So Dennis wants to know, how's the exchange rate right now from Canadian to US dollar?
I don't know off the top of my head, but I know it's not the greatest.
Is it favorable or unfavorable?
Well, I think it depends on what you're doing with the money. If you can make like, the way I look at it is I can make more money in the US regardless of the exchange rate. So that kind of plays into my consideration. I think it's like $1.31 or something right now.
So for every dollar, so every Canadian dollar gets you 130 US dollar.
And the other way around.
The other way around. So 130 Canadian gets you $1 US.
Yeah.
So it's an unfavorable exchange then.
Right. So the end of the day, I think it's always like, it's usually around, like lately it's been around that $1.30. I think before our governments printed all this crazy money, it was like $1.20 maybe. So,
yeah. Well, it's funny. When I worked at my W-2 job, we were an international company, and I knew a lot of exchange rates. The most prominent one that changed was when I had first started my job in 2013. The exchange rate from USD to GBP, which is British pound, was like 1.6. And then, it had gotten all the way down to like 1.1.
right.
So it was a very favorable transaction for GBP to USD, right? Because the GBP was worth more. So a lot of the British people, they would fly over to the United States. They'd go on shopping sprees and get everything on like a 60% discount.
Well, it's funny. So like, we used to always, like, when I was younger, we'd go shopping in the US because things were cheaper.
Yeah, because
But
it was a favorable exchange
Yeah.
rate. Now it's unfavorable. Now it costs you more.
But I think when you're comparing it, like, yes, it costs more, but at the same
But
time,
on an investment basis, yeah, your opportunity is in the United States. So that's irrelevant for most people, right? Because they just look at it as, what's my dollar for dollar exchange rate here.
Right.
But
and then
I totally get, it wouldn't even matter to me what the exchange rate is, because no matter what, as long as I get US dollars working in the US, I'm going to make more money.
Yeah. And then
Yeah.
the other side of it is like, Canadian real estate on average is inflated way too high. Like, it's just crazy how high it is here compared to the US. So, like, I don't know.
What's the primary driver with that? Is it the debt? Is supply, demand?
I don't know, to be honest. It's I think there's like, Canadian real estate's always been inflated, like substantially higher than the US. But I think lately it's just really shot up like crazy. Like, I think mathematically in Vancouver, it's impossible to live. Like mathematically, it doesn't even make sense, but yet people are still doing it. People are still living there and buying crazy amount of houses. Like I don't know exactly what the real estate like houses go for in Vancouver, but it's like for a single family house, it's you're like million, like at least $1 million for a tiny little house. Like it's
Hmm.
crazy.
Sounds
So
like San Francisco.
right. But then like there's certain pockets. Like we bought like that's kind of the other that kind of leads into why we're doing stuff in the US over Canada now. Like I'll still buy stuff in Canada. It's just got to be the right property. Um, but overall, typically the way I looked at it kind of from a simple level is you literally have 10 times the amount of more people in the United States than you do in Canada. The land and the real estate is cheaper. And in my opinion, there's way more money. So it's almost like, well, why would anyone buy a house in Ontario where the rules are favored way more for the tenants, and you're paying a crazy amount of you're paying a lot for that piece of property for what? Like for very little, if not like any cash flow. When you
Sounds
could
like you
literally
love
go,
Canada.
what's that?
Sounds like you love Canada. You gonna stay
Yeah,
there forever?
no. And then
No.
literally from where we invest, like in southwestern Ontario, where I started, if you go across the lake into like Cleveland, for example, it's, maybe not the greatest appreciation of real estate, but the value of property is substantially cheaper. Like
Yeah.
even in Niagara Falls on the Canadian side versus the US side, it's crazy what the price difference is for the same piece of like for the same property.
Yeah, that's literally a stone's throw away.
That's right.
Yeah. So we got another question from Facebook user is, do you foot the bill for an investor who wants to invest with you and do the LLC setup, or is it on the investor?
Do you foot the bill for an investor who wants to invest with you and do the LLC setup? So for our self-storage investment stuff, we pay all the basically subscription documents and all the legal stuff to get all of that set up ahead of time. Like that's kind of part of our um, basically just another expense in our whole overall transaction. So we pay for that to get it set up, and then if an investor's like, I want to invest in that deal, we propose them that option, and then so in a roundabout way, yes, I guess we do foot the bill for that.
Yeah, I mean, it's included as a syndicator, it's included in your total closing costs, right? Because some of that stuff has to be paid up front. Other things are paid on the closing statement. But if you're an investor in the deal, your investment, it's like your all-in cost is included in your PPM documents and all that kind of stuff.
Yep. Yep.
So
Hopefully that answers his question.
I think it does. I think maybe there was a misunderstanding there where it was like, well, if you're trying to help somebody invest into a short-term rental in or like a single family property in the US, that you would do that. But no, we're speaking specifically of syndication type deals and PPMs and things like that.
Like even when we bought some single family houses, like some smaller stuff, like I still did things under like the LPGP structure, and I just
Mhm.
budgeted whatever that costs in part of the deal, right?
Yeah, right.
There's,
And I mean, that's
that's
pretty
shit.
expensive, right? Because setting up a PPM, I know at least in the US, is anywhere between $10,000 and $15,000 for
Yeah,
some of these
like on
local,
our so for like the small single family stuff, we just did like a simple,
very
a
basic.
simple limited partnership agreement.
Hmm.
Obviously, the storage syndications,
Way different. Yeah.
yeah, like we're probably 50 grand to set
So
up.
I
So
want to talk about real quick. So like I know you said you're doing these big developments now, but like how did you get there from being in the single family to like making the decision to look into new asset classes and go into self-storage? And like what did your first couple of deals look like? And how did you ultimately end up in development of all other places? Because development is like a closely guarded secret. There's not like a lot of stuff online on how to do a development. So it's like you had to know somebody or get introduced to somebody to get it done.
yeah, so we partnered with somebody who was already doing development. So
Hmm.
we brought them on as the GP partner. Or we gave them a small percentage of equity on the GP side for them to essentially provide us their contacts, their relationships, the people that they use, how they're doing it, how they set it up, who they're talking to for financing and all this other stuff. And not that I want to say we copied them, but we
You
essentially
did.
copied them. Like
Yeah, right. I'm not reinventing the wheel. I'm just doing something that
yeah.
involves risk.
And then like I think it's slightly different being Canadian doing it as a like doing it in the US because like we for the last 10 years I've looked at things completely different than the way I guess a US citizen does. So now I'm taking what I know from what I've done in Canada and doing that in the US, and I'm like I can I can do this and I can syndicate that deal and I own this much money and I'm raising the money from here. And like the way it's set up, it was just like it just made sense. So the way I looked at it almost seemed like a unicorn um, doing like doing this like these developments in the U.S. Like I have multifamily and there's nothing bad about multifamily. Everyone always needs somewhere to live, and if you have good tenants, it's wonderful, right? It's a great asset. But I think I've had so many, I don't know, hiccups, I guess, with multifamily that I was not in a way done with it, but if the right deal came along right now, I'd still do it. But I just like the way storage is operated, like from an asset point of view, from when I'm raising money from investors, the financing component, like to build it, like everything just made sense when I looked at it. So, you're developing a facility and you're like, okay, well, who's going to rent it? And I'm like, when you rent a multifamily property, typically it's, low middle class people versus self storage. You have everybody. You have low middle class people, you got rich people, you got doctors, dentists, lawyers, contractors, business owners, students, old, young people, like literally all walks of life use self storage.
Hmm.
So, which was nice to know. Okay, if through economic downturns like we're in right now, if a class of people don't make money, well, the other people are still paying and making money. So like it kind of, I guess, smooths out your safety net, so to speak, right? Plus, you look at the last 40 years of self storage. Over the years, there's literally hasn't been a dip in the value of self storage, because during good times, people make money, they buy toys, they store it somewhere.
Hmm.
During hard times, they're downsizing, businesses close their doors, whatever. But then they don't just get rid of the stuff; like it has to go somewhere. So they end up like, well, I'll pay a couple $100 a month and I'll just store it until this storm goes over, and then we'll reopen or whatever.
Hmm.
Or they don't want to get rid of grandma's furniture, and they just like, well, we'll just stick it in storage for now because it's I don't know, it over time it just makes sense from multiple different views, I guess.
Yeah. No, I get it, man. It's interesting. I have been tempted by the forbidden fruit of self storage, being a multifamily guy myself, but I keep coming back to what we know and what we're good at, and it makes sense for us. And self storage makes sense for you. And I always find these conversations interesting because there's no right way to make money or no wrong way to make money either.
And like that's
Just
what I'm saying.
whatever.
I still own multifamily. Like I
Yeah.
still
Right.
have them. It's just
If I were to own self storage, I'd probably be a limited partner. you
and hey,
know,
you gotta start somewhere, and that's what
that's right.
right. But yeah, at the end of the day, like there's multiple asset classes. Like you can own a business, you car washes, laundromats. Like there's all kinds of different ways. It's just like
Yeah.
whatever works for you and whatever you enjoy, then give it.
Yep. All right, man. Well, hey, thanks so much for joining the show today. I really appreciate our talk, and looking to catch up with you again sometime soon. But if people are trying to get in touch with you, how can they find you?
Probably the easiest is on Instagram. I think my handle is nickvandyke.nvd. I'll have to double check. Pretty sure it's nickvandyke.nvd. That is.
Yeah, I know you're super active on Instagram. I don't think you do as much on Facebook and things like that, but are
Yeah,
you
no,
super?
it's
Are you on LinkedIn?
no, I am on LinkedIn, but I don't remember last time I opened it. So,
Yeah.
Facebook, I'm on there too. I wish the stuff from Instagram would always go to Facebook, but only some of it wants to. So, but yeah,
Mm.
either way, if somebody's got questions or whatever, feel free to reach out.
Awesome. All right, Nick. Well, thanks so much. I appreciate your time, and we'll see you next time.
Perfect. Thanks for having me.
Peace.